Welcome to our discussion on the balanced scorecard for managerial accounting. So, in this particular topic, we're going to talk about some of the strategic metrics that may be used to measure how well the company is doing in a balanced manner, as opposed to just financial perspectives. So, when we talk about financial perspectives, we know that that ultimately is very important for a company because that's how investors will take a look at them, that's how creditors will take a look at them. So they're very important. But if you focus too closely on just the financial results for a particular period, they can be very, very misleading in the short run. So, as a manager, as any individual manager in a company, you're going to have certain things you're accountable for. A lot of them will relate ultimately to financial results. But if you have an unethical manager in the situation, they're going to be trying to do anything and everything they can to increase the financial results in the short run, especially if that unethical manager is trying to look, again, just to increase their bonus for this quarter because they know they're going to be leaving maybe next quarter or getting fired, perhaps. So rewarding that manager solely on the short-term financial results can have disastrous consequences for the company. And what ends up happening here is we're going to have short-term financial results that look good, but they're going to be at the expense of long-term success and stability of the company. So that's really what this topic of balanced scorecard is all about. So here are a few examples. So again, let's say we have a manager that their sole concern is getting the biggest bonus this year they can, and they don't really care about the long-term success of the company because they're not going to be around. You may see things, again, their goal is trying to increase, let's say, profit. Their bonus is based on profit. So you may see them trying to cut a lot of costs without any regard to what that means in the future. They could be cutting research and development expenses. Now, that's a big cost for many companies, especially think of a tech-type firm or even, product firms, merchandisers that sell new and improved products. Cutting in research and development will certainly decrease a lot of expense this period. The problem is the long-term effect of that is going to be now that you're no longer competitive because you're falling behind your competitors. They're doing their research and development to get better products, but you're not. That's the concern there. Yes, you cut costs. This period looks profitable, but it's going to harm you down the road. Let's talk about cutting training for your employees. So training can certainly be a large cost in some companies, so you're going to cut it to try to decrease the cost. The problem is if you don't train your employees properly, a couple of things could happen. They, first of all, may not do very good. First of all, they may not understand how to do their job well because they weren't trained. Second of all, just the lack of training may make them feel like they're not really empowered. It may make them feel just unappreciated in the company. It may demotivate them. So that could have an effect there as well. You may increase the turnover, certainly increase the failure rate. So cutting training can have disastrous effects down the road. Cutting customer service. So certainly customer service can be a high cost, and you may decide, let's just cut it. We want to decrease costs this period. The problem is eventually that's going to come back to haunt you if customers feel that they're not being satisfied, they're not being provided the level of service they need or expect. They're going to go to a competitor. You're going to lose your revenue down the road. It may not happen right away, but it very likely will happen. Cutting quality assurance. So let's cut down the reviews we're doing on the product. We're not going to inspect any more products. We're just going to get it done, hope it's good, send it out. Again, that will cut costs this period, and it may not harm revenues this period, and we may not see any lawsuits from faulty products this period, but in later periods we most likely will. If we have a poor quality product, customers are going to be unhappy, and just like with the customer service, they're going to move to another competitor. So what we're basically saying here is that this short-term cost cutting can hollow out the company for the future, and it can make it very difficult to come back from. Take the quality assurance, for example, again. I mentioned lawsuits. Let's say we no longer inspect any of our product. Maybe we decide to use lower quality materials to cut costs, and we end up with a faulty product that injures somebody or kills them. We're going to have lawsuits coming at us, and again, that may be ways down the road, but that could harm our reputation. Obviously, there'd be a financial impact down the road. It could be hard to come back from, and we may not be able to come back from at all, depending on the scope of it. So this is just a brief little example of a balanced scorecard. We break our perspectives up into 4 different groups instead of just focusing on the financial perspective. Now notice I put that in the center on purpose because it ultimately is where everything connects back to. The financial perspective, that's the end result, but you can't just look at one period. You want to look at the trend, you want to look at the future years when they happen. That's how you analyze a company. So, financial perspective, we're going to see some metrics in just a bit. Those are obvious. The various return on investment type ratios, profitability ratios, just all the things you normally learn in financial accounting. That's what we're going to be looking at for financial perspective. But for learning and growth, we're going to talk about research and development here. We're going to talk about training, especially things that we're doing to help improve the company long term. Customer perspective. How does the customer view us? Are they satisfied with the product? And then we could be talking about the internal business process perspective. So this is what type of re-engineering do we do? Now, I'm not talking change just for the sake of making change. We're talking change that leads to a better process or a better product. Are we doing things? Are we adopting new ideas? Do we have new products going out? Things like that. So here's a list of items that may be found under each perspective. These are just examples. There could certainly be many more. Now, under the financial perspective, again, a lot of these are things you'd learn in financial accounting, so I'm just listing them here to give you an idea. Here we have net income. Obviously, just your raw net income number. From year to year, is it improving? Growth in sales revenue. So, what amount did we have compared with last year? Gross margin after considering the cost of goods sold. Just raw cash flow. How much cash flow maybe did we have from operations? Return on investment. We get into a couple of the more capital type metrics. Net present value. So based on all the capital we've invested, considering the inflows and outflows, what was the net present value? Now again, we have other discussions on these two individually. And residual income, after considering what you were expected to return percentage-wise based on the capital that you employed, how much extra did you return? Did you return more than expected? If so, you're going to have positive residual income. That's what we're getting at there. So now we have the customer perspective. These are things, again, from the customer's viewpoint that show that they're satisfied, that they're going to come back. Customer satisfaction scores, just raw scores. If you send out a survey, how many respond? What types of responses do you get? Market share percentage. So are we the biggest competitor in the market for this industry? Increase in number of customers in general. If your number of customers are increasing year after year, that means you're growing, you're doing something right. Then you could break it into 2 pieces. Number of repeat customers. Once you get a customer in, you want them to come back time and time again, but you also want to look at number of new customers. How many are we attracting? Because as long as you keep your existing customers coming back, the only way to grow is to have new customers, assuming you've already met all the needs of your existing customers. Then you want new customers to expand your base. Now, of course, you want to take a look at the bad side as well. Number of customer complaints. You want that to be minimized, but you want it to be a truthful number as well. You don't want to hide the customer complaints. You want to give them a chance to respond. Percentage of on-time deliveries. So, are you meeting their needs? Percentage of sales returns. That means perhaps a customer was dissatisfied. When we get to the internal business process perspective, things that we would measure, Some of these require a little bit of a calculation, like manufacturing cycle time. Cycle time is the average length of time it takes to complete the product. Here we're talking specifically on the manufacturing portion of it. So from the moment we buy the materials to the moment we have a finished piece of inventory, how long did it take? We want to do everything we can to reduce that time because it means that we're not tying up our inventory cash, or the money we invested in inventory, as long we get our money back more quickly. We can sell it and get our money back. Now, here we're talking about speed. It's related to cycle time, but now we're talking how many number of units can we produce per hour. If we decrease the cycle time, we increase the number of units we can produce in an hour. Number of new products developed. So again, we're doing something right. We're developing a new product, and that actually leads us to the next one as well. New product development time. How long on average does it take us to get to a new product? Number of warranty claims. This means that something has failed during manufacturing, so we want to reduce this. And obviously that ties right into defect rates. Average amount of time for repairs. How long does it take us to repair a particular product? And then average customer wait time. If they order it, how long does it take them to get the product that they want? You can see how some of these would easily tie into the customer perspective, because if you make the customer wait longer, they're going to be dissatisfied. If it takes them longer to get a repair, they're going to be dissatisfied. So you'll see that all these perspectives, even though in the last illustration I only showed them linking to financial, they really interrelate to one another as well. Learning and growth perspective, a lot of this deals with employees, number of training classes for employees, hours of training for employees, employee satisfaction scores, employee turnover, and the number of employee suggestions implemented, which makes them feel more empowered and makes them feel more part of the team. In the end, the goal is that implementing some sort of balanced scorecard should help the company in the future rather than just in the short term. So yes, the short-term financial results are important. Investors respond and react on those short-term results, but you can't just decide to focus solely on the short term and forget about the long term, because regardless of how successful you'll be this term, if you don't properly invest, whether it be employee training, customer satisfaction, quality assurance, things like that, if you don't invest in those for the future, you're not going to have a future, or it's going to be a very bleak future. So that takes us to the end of the discussion on balanced scorecard. Hopefully this helps to clarify this topic of managerial accounting. Thank you for watching my accounting video on YouTube.com. I hope you've enjoyed that information. Accounting can be a difficult topic to conquer, and sometimes you just need additional information or assistance outside of the classroom. If you feel like you need some additional information, some additional resources, come visit my Udemy.com course. I have a variety of financial and managerial cost accounting courses available that may be able to assist you if you're having trouble with a particular course. In these courses at Udemy.com, I have additional lectures on a variety of accounting topics. We also have downloadable Excel templates for all of the various practice exercises we work, as well as a video walkthrough of the solution. I continue to update these practice exercises, so even after you join, you may see some new exercises. It's all geared toward helping you to understand the topics. So in addition to those additional lectures and the practice exercises, we also have quizzes and tests to help gauge your understanding of the topic. That may give you a better idea if there's something you need to go back and learn a little bit more about, read more about, watch a video on. We also have downloadable study notes that really try to drive that home. There's a downloadable textbook with it. So feel free to come join this class, come take a look at it. You can find this at udemy.com if you search for Severson, or you can just Google Severson Udemy Accounting to see a list of all the courses that are currently available. Again, I'm working on new courses as we go. Right now you'll see some financial and managerial accounting courses out there. I'm working on the intermediate and advanced side of those particular courses as well, so you may see new ones out there as well. Now, email me for a special 50% off coupon code. You can send an email to chrisseverson@hotmail.com and I will respond with that code. It's a different code for every course depending on which one you want. I can also respond with the actual link to that course. Now, all courses at udemy.com have lifetime access, and there's also a money-back guarantee if you're not satisfied. So come check out my course at udemy.com and see if it may be a fit for you. Thank you for your time.